The U.S.-Nigerian trade flipped dramatically in 2025, with the United States posting $1.45 billion goods surplus in the first 10 months of the year. Fresh data from the U.S. Census Bureau shows American exports to Nigeria surged by $5.94 billion, while import from Nigeria fell to $4.49 billion, reversing a $1.37 billion deficit recorded in the same period of 2024. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. The U.S. recorded $162 million surplus, up nearly 40% month-on-month, exporting $532 million to Nigeria against $369 million in import. Year-on-year, the turnaround was even sharper. October 2024 ended in a $103 million deficit, but by October 2025, the gap flipped as U.S. exports jumped more than 80%, while Nigerian shipments edged lower. Cumulatively, the U.S. exports to Nigeria rose by $2.23 billion, a 60% increase, making Nigeria the largest single destination for U.S. goods in Africa, absorbing about 17% of all U.S. exports to the continent. Nigeria also played a decisive role in U.S.-Africa trade. Without Nigerian surplus, America's overall trade deficit with Africa could have widened significantly. Despite new U.S. tariffs under President Donald Trump, Nigeria emerged as a bright spot for American trade in Africa, offsetting nearly 28% of the U.S. trade shortfall with the rest of the continent and underscoring its growing weight in transatlantic commerce. Analysis shows that numbers shows a clear reality. Stronger U.S. export performance, not falling Nigerian exports alone, drove the reversal, while the tariff created headwinds. Nigerian position as a key African trade partner strengthened, exposing both opportunities and a warning. Nigerian export profile remains narrow, and future gains will deepen on diversifying beyond oil and commodity while navigating tougher U.S. trade and visa policies. Nigerian money supply continued its upward climb in December 2025, underscoring persistent liquidity expansion in the economy. Broad money supply M2 rose by 1.2% month-on-month to 124.4 trillion naira, up from 122.9 trillion naira in November. According to the Central Bank of Nigeria latest money and credit statistics, a closer look at the data shows broad-based growth across key components, with exception of Kwashi money. Narrow money M1 recorded a strong 4.05% increase, rising to 42.14 trillion naira from 40.5 trillion naira. Demand deposit followed the same trend, growing by 3.08% to 36.7 trillion naira, while currency outside banks surged to 10.2% to 5.4 trillion naira, pointing to a notable rise in cash holding by the public. In contrast, Kwashi money slipped slightly by 0.18% to 82.25 trillion naira, suggesting marginal weakening in saving and time deposits. Overall, money supply growth was largely driven by a sharp rise in banking system credit. Credit to the government jumped by 29.5% to 34.2 trillion naira, while credits to the private sector increased by 1.6% to 75.8 trillion naira, pushing net domestic credit up by 13.9% to 105.06 trillion naira. The expansion was further reflected in currency in circulation, which rose by 9.6% to 5.7 trillion naira, indicating that cash usage remains strong despite the growing adoption of electronic payment platforms and ongoing monetary tightening efforts. This means the December figures point to sustained liquidity growth, driven mainly by heavy government borrowing and steady private sector credit expansion. While rising money supply may support economic activities, the sharp increase in cash outside banks raises concern about inflationary pressure and the effectiveness of money control in the cash-heavy economy. Private sector contribution powered Nigerian pension inflow in 2025, pushing total remittance to 1.318 trillion naira in the first 3 quarters of the year, according to data from the National Pension Commission. The figure brings contribution to close to 1.368 trillion naira recorded in the whole of 2024, confirming sustained momentum in the pension system. PenCom quarterly data shows that pension contributions have remained above 1 trillion naira mark for 4 consecutive years, a sharp contrast to earlier period. By September 2025, cumulatively pension contribution since inception has climbed to 12.627 trillion naira, reflecting deeper coverage and improved compliance across the economy. The private sector clearly led the surge, contributing 744.36 billion naira, while ahead of 574.42 billion naira remitted by the public sector. Quarterly inflow rose steadily from 389.17 billion naira in the first quarter and 426.42 billion naira in the second quarter, before peaking at 503.19 billion naira in the third quarter. The third quarter spike was driven almost entirely by private sector remittance, which hit a record of 338.65 billion naira, the highest quarterly contribution across both sectors. Public sector inflow followed a different pattern, rising from 185.93 billion naira in the first quarter to 223.95 billion naira in the second quarter, before dropping sharply to 164.54 billion naira in the third quarter, reflecting seasonal payment cycle. In contrast, private sector contribution jumped strongly in the third quarter, highlighting growing participation by private employers and workers. The strength of contribution aligns with the broader growth of the pension industry. Pension fund assets rose to 26.66 trillion naira by the end of October 2025, reinforcing the sector's position as one of Nigeria's largest and most stable sources of long-term domestic capital. Analysis shows that the data underline a structural shift in Nigerian pension system, with the private sector now driving growth, stronger compliance, wider coverage, and rising employment-linked contribution, and strengthening the pension pool, boosting long-term savings as well as deepening capital available for investment across the economy. AMCOM stepped up its recovery drive in the first half of 2025, posting a 28% jump in cash recoveries to 66.12 billion naira, up from 51.71 billion naira at the end of 2024, according to the Central Bank of Nigeria Financial Stability Report for the first half of 2025. The stronger performance helped ease pressure on the corporation balance sheet, as total cumulative recoveries climbed to 2.43 trillion naira, reflecting sustained effort to mop up bad assets and strengthen financial stability. Overall, recoveries rose by 4.42% to 2.43 trillion naira, driven by a mix of cash inflow, asset forfeiture, and other non-cash collection. Cash recovery stood at 984 0.52 billion naira, while other collection reached 1.29 trillion naira, supported by proceeds from property and share sales, rentals and dividend income, as well as sales of breed banks and reinvestment income. Asset forfeiture added 149.9 billion naira, highlighting the breadth of the AMCON's recovery channels beyond direct debtors payment. Investment income also improved, with treasury operation generating 15.22 billion naira, up from 2.08% from the previous half year. On the liabilities side, AMCON made notable progress, cutting the carrying value of its obligation by 7.84% to 5.24 trillion naira, signaling improved debt servicing and settlement. However, as recoveries and asset disposal continued, total asset net of the impairment declined by nearly 31% to 1.27 trillion naira, underscoring the winding down nature of AMCON operation. During the period under review, 577.84 billion naira was paid into the banking sector resolution cost fund and used to meet obligation on AMCON issued securities. The rise in the cash recoveries point to improved enforcement and asset resolution, easing AMCON debt burden. However, the sharp drop in the total assets reflects accelerated disposal, reinforcing the reality that recovery gains must be sustained to fully close the gap between liabilities and remaining assets. All right, let's take a quick short break now. We'll be right back. Don't go away, stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government policies. The Central Bank of Nigeria has rolled out a sweeping new policy to reshape how automated teller machines are deployed and managed across the country, tightening standards on asset security and customer protection. The new minimum standard contained in a draft guidelines on ATM operation released over the weekend override all previous ATM regulations. Under the new framework, card issuers must deploy at least one ATM for every 5,000 payment card issued, a requirement to be met fully within 3 years. Compliance begins in 2026 with 30% implementation, rising progressively to 100% by 2028, signaling a clear push to expand access and reduce pressure on existing machines. The policy also places strong emphasis on safety nets and oversight. ATM must be installed in secured locations that protect users and transaction confidentiality, and machines located outside buildings must be firmly bolted to the ground. Any deployment, relocation, or removal of ATM now requires prior written approval from the CBN, while independent ATM deployers must be licensed and backed by a partnering bank responsible for cash supply. On consumers' protection, the new rules tighten the timeline for failed transaction reversal. On transaction must be reversed instantly, while unresolved cases must be completed within 24 hours. For notes on U.S. transaction, refund must not exceed 48 hours. Banks are also required to automated refund for non-dispense error without waiting for customers' complaints. Security standards have been significantly raised. All ATM must be fitted with cameras to monitor activities, deploy anti-skimming devices, and operate on secure networks that protect data confidentiality. ATM key must be changed annually. The same key must not be used across multiple machines, and customers must be allowed to change their PINs free of charge. All operators are now required to comply fully with the PCI data security standards. Operational efficiency is also under scrutiny. ATM downtime must not exceed 72 consecutive hours. Cash must be available at all times, and customers' information such as charges, help desk contacts, and receipts must be clearly provided. Institutions must submit monthly deployment and performance report to Central Bank of Nigeria, while the regulatory will conduct regular audits and on-site inspection. With penalties and awaiting defaulters, the new ATM policy signals a tougher regulatory stance aimed at improving access, security, and reliability of cash service by linking ATM deployment directly to card issuance and enforcing strict refund and uptime rules. The CBN is pushing banks to match digital growth and physical infrastructure while closing gaps that have long frustrated customers. Before we call it a wrap on Business Point today, let's take a quick look at the stock market. The Nigerian stock market ended last week on a bearish note, snapping a string of bullish sessions as investors took profit across key sectors. The NGX All Share Index fell 0.4% week on week, closing at 165,512.18 points from 166,129.50 points, while market capitalization dropped by 394 billion naira to 105.959 trillion naira, reflecting broad-based caution. Trading activity slowed with 3.748 billion shares valued at 99.865 billion naira exchange across 237,179 deals, down from 4.607 billion shares worth 130.636 billion naira the previous week. The financial service sector led activities, accounting for 46% of traded volume and 45% of total value, followed by service and ICT sector. Top traded stocks secured electronic technology, tantalizers, and assets holdings contributed 20% of total volume. Price movements showed a shift in sentiment. 58 equities gained, down from 80 the prior week, while the 40 equities declined more than double the previous week. 17 and 50 remained unchanged. Analysts noted that selling pressure concentrated in heavyweight banking, consumer goods, and industrial stocks as short-term traders locked in profit ahead of the next earnings season. The market's pullback signals a consolidation phase after recent rallies, with investors recalibrating position amid evolving macroeconomic conditions, while mid and small cap stock shows pockets of resilience. Broader demand remains insufficient to sustain upward momentum, suggesting cautious trading could persist in the coming weeks. And that's a wrap for today's Business Point. From the US-Nigerian trade flipping into $1.45 billion surplus to Nigerian money supply rising to 124.4 trillion naira, while private sector-led pension inflow hitting 1.318 trillion naira. AMCON boosting cash recovery by 28%, and the CBN tightening ATM deployment rules. The economic landscape is shifting fast, even as the stock market pulse with profit-taking. This development highlights a mix of opportunities and cautious underscoring the need for diversification, stronger compliance, and strategic monitoring to sustain growth. Kindly follow us on all our social media platforms using @GlobalTVNG. Till I come your way again, I am Kike Lomo Okere. I celebrate you all.